Hi, I'm Laurent Rousseau, Deputy CEO of SCOR Gold PNC. I would like to thank you for having me at the 14th Digital Indian Insurance Rendezvous, and of course I'm very sorry not to be able to be with you today. I will take you through the topic of looking at 2020 and looking at the next decades to see how they will transform our environment. So first of all, we can look at how 2020 was shaped by the virus. How did our world got influenced and structured by the virus? There are in fact four elements that I will take you through. The first one is really looking at the state of the pandemic, statistics globally and as well as India. Second, we will look at the economic impact of the crisis, whether it is economic, financial, social. As a third step, we will look at people and organization, which have been deeply impacted by the COVID-19. Last but not least, how did the reinsurance industry react to that situation? So first of all, let's look at the statistics of the crisis. I will not go through those numbers into details. You might have seen some of them. Millions of people have been impacted by the pandemic. The event is still at work, if not increasing. And you can see on these graphs that the number of cases has been increasing. And even though the occurrence rate has been decreasing in India, for example, we can really see the virus at work in a number of countries, namely in the UK and in the US, where the situation is only getting worse. India actually compares very favorably, and the virus situation has been improving since September, both in absolute level and relative terms. We go through different cycles, different countries are having different phases. We are in it for the long term, and we should be extremely prudent in the way the situation evolves. Now, looking at economic circumstances, we've often read that we would oppose economic situation with health. And I think these two graphs here really show you that in fact, it's very easy to combine a healthy economic situation with health. We shouldn't be opposing one with the other, trying to show deteriorating health for the benefit of the economy. Actually, these two graphs show there is a very positive correlation for those countries who have a healthy economic situation and have managed to improve the health environment for their country. Now, looking at Asia, more specifically speaking, you can see actually on the right-hand side of this graph that the economic growth has already resumed a while ago while the pandemic was at work. I think part of it is due to the fact that Asia has been used to dealing with pandemic and with health situations of this nature. On the other hand, Europe and the US are still battling, and depending on how quickly the herd immunity system works, we would expect growth to resume at least, or at best, in second half of 2021. In terms of organization, this current situation has created a number of very interesting debates, if not opportunities, on the work from home situation. Is it more efficient? Are we gaining time? Are we working better? And the analysis here shows you that even though at an individual level, working from home is intrinsically more efficient, actually from a managerial point of view, it is far less. And if you look at it even from a collegiate working together, a creativity working aspect, actually the work from home has been rather negative on the way we work. And this topic of the work from home is really something that will continue to evolve, and I would expect, and we'll come back to it in the next chapter, the ways of working to deeply evolve. And this work from home situation has created very interesting risks as well. We show on this page the cyber risks that have increased tremendously, and this cyber risk is really one that has come in a underlying way to the crisis, and we would expect to still very much remain in our environment. Now, if we look at the reinsurance industry and the way that we see the current pandemic environment, actually there was a big surprise, which is that the life risks only represent about 10% of the estimated exposures. So the big surprise, if you wish, came from the P&C environment, whether it is credit and surety, whether it is a property business interruption, or even cancellation. So this is the first circle on the left-hand side. Now, the way the claims are being split between insurers and reinsurers is still being heavily discussed. It's way too premature to draw any definite conclusion on that split, but you can see today The estimate based on the disclosures from insurers and reinsurers show roughly 2/3 for insurance companies and 1/3 for reinsurers, which is not too far from what we see in a traditional catastrophe environment. Last but not least, we have often mentioned the benefits of a slowing down economy, the fact that people stay at home a lot more, therefore having less home insurance issues. They drive a lot less, having benefits for motor insurance. So you can see that still, of course, the cost of the pandemic way more outweigh the benefit from lower frequency of the economy. Now, if we look at the reinsurance environment, at the reinsurance industry, more specifically speaking, you can see here that 2020 will have been really a very heavy year, both from a cat point of view and as well compounded by the COVID crisis. And if you really step back over the past 10 years, you can see that the increase in nat cat claims has been weighing on the industry very heavily. Having said that, if you look at the capacity available to the insurance industry, the capacities deployed by the reinsurance industry, you can see it actually has been very resilient. Even though the reinsurance capacity has decreased in 2020 and over the past few years, this one is rather modest, I would say, a few percentage points. And two, if you look at the main block of the traditional reinsurance capacity, it has remained stable, has not decreased. And this availability of capital in the reinsurance industry is really explaining why we have been having rather competitive environment. Now, if we look at the current discussions that we have been having with our clients and the way we look at the current exposures, there are a number of very important uncertainties weighing on us. Some of them are, I would say, underwriting. So if you look on the life side, we've had some huge concerns at the beginning, and then the virus got better controlled, better understood, and so the underwriting risk maybe has decreased. Now there is still a fairly broad range of outcomes that we are unclear about. On the P&C side is the inverse. The underwriting risk has been clearly underestimated at the beginning and got reevaluated over time. This is the underwriting risk. But you can really look at it as well as through the operational risk. Here, as we got better to protect the employees, most organizations were very good at ensuring continuity, business continuity, IT support to work from home. That operational risk has decreased. But there's still some health concerns that every employer should keep at heart very, very clearly. Other risks, of course, include the financial ones, and where here we're probably going to have increased risks in the very long term with the wall of debt to be repaid. Now, the way that the reinsurance industry has responded is through increased capital raises. This is a typical feature of the reinsurance industry. There are capital raises post-event. So you can see here when we compare to Katrina, Rita, Wilma, when we compare to the World Trade Center, the COVID environment in 2020 was no exception. What's interesting, though, is that the capital raise so far has been a lot more by the existing players, the established players, the established insurers and reinsurers, than by newcomers. But watch the space, and of course, 2021, I'm sure, will keep us some surprises. So let me turn to the future now, and not look necessarily at the immediate future, but the next decade, which is quite a task. So I'll try to take it in a very, again, as I said, humble and prudent way, looking at the key directions. First of all, if you look at the current mindset that we're in, there is a state of shock. The state of shock is in the unconscious of the people. Fear has been and is around us, physical fear, fear for health. The individual's fundamentals have been threatened, and I think this will really mark the unconscious very deeply. Just like we remember vividly the global financial crisis of 2008, just as we remember vividly the World Trade Center, I think this 2020 year will remain very much in the unconscious of the global population. And that, I think, is very important in terms of biases, in terms of behaviors, to understand that this is going to drive a number of behaviors. The one, of course, will be the public risk management. States have managed a crisis. Have they failed? Are they succeeding? I think the question of risk management from the public authorities and how do they provide protection to the people is again going to be a defining moment for future policy. So in a way, and one of the key directions is that we will be increasingly looking for the minimal protection for human assets. What I mean by that is we go back to fundamentals. Are you in good health? Are you protecting your family? Are you protecting your environment at large? And this, I think, is really, and this is going to be the message from my presentation today, is although the crisis is still with us, we need to take it as an opportunity to really look forward and see where the changes should be coming from. And there is this little say in English that you should never miss a good crisis. This is really what we're talking about here, is how do we really build our future capabilities to be more resilient and to be more innovative in face of adversity. I will look at the next decades on these 6 points that you can see on the screen here. First of all, the economy and politics, the macro environment, if you wish. Second, the digital transformation that has been at work and is really being accelerated by the COVID crisis. How does that impact the risk coverage? So what I mean by that is the insurance world, insurance and reinsurance, both on the life side and the P&C side. How does that impact what I call here the ecosystem developments, i.e. the value chain of the insurance industry, moving from a very linear chain from insureds cede their risk to insurers, who cede their risk to reinsurers, to a complete platform, if you wish, an ecosystem where there is much more of a centricity around clients accessing various services and products. That, of course, is allowed by fundamental shift in consumer behaviors, which we'll tackle briefly. And finally, I really look at people and organization and how do organizations drive that change. Now, if we go to the first point on the economic environment, you can look, over the long periods of time, the debt levels have been tremendously increasing, whether it was in the world wars or more recently, since the global financial crisis, and the COVID crisis has really pushed the global indebtedness to levels that had been not seen since the Second World War. The question is, what's the answer to this? Because money has been injected in the systems, central banks have intervened, but we should make no mistake, this money will have to be repaid at some point. It's quite a huge task, but if you look back in history, this has been seen before, and the answer to that has been inflation. The question is, will inflation be again the answer? The inflation has a huge cost. It wipes out savings in a massive way, and this will be probably a defining question for the next decade. How does the Asian continent feature in this? I mean, Asia is huge. There are many very different circumstances, situations. Some of them closer to mature markets, some of them much faster growing economies. But if you look on the aggregate, clearly the weight of Asia has been increasing in the global GDP. Since 2002, it has increased by 50%. And if you project this trend, you would expect actually the Asia GDP to represent 50% of the global GDP by 2043, 2045. And so Asia will continue to play a major role. And this is fundamental belief that I personally have, is that capital flow will continue to shift to Asia. The currencies will appreciate. The financial markets will continue to outperform. And all the companies will really have to sell in Asia. And personally, I'm very optimistic for the prospect of Asia, and the recent crisis has very much facilitated it, if not accelerated it. Now, if you look at global imbalances, beyond the economy, really looking at social risk, at geopolitical risk, here I think there's a lot more cases to be very concerned. On this page, I show the Economist covers of 2020, and it's a very telling point of how society look at risks. Whether it is the gap between Wall Street and Main Street, I mean, financial markets are again taking irrational behaviors, completely disconnected from the reality. We've seen the power of protest in a negative way and in a very positive way, but people are becoming a lot more militant about what they want, what they believe, and how they want to commit to society. Race, of course, has been a major feature, not just in the US. It's a global issue, and the question of diversity beyond race is one that is really gaining momentum. Last but not least, and as demonstrated very recently in the country of democracy, we should never assume it can be taken for granted. There are some profound risks to democracy. So I think this macro environment is extremely volatile and would really bring us to some kind of humility, as I said before, when we take this view on the next decade. After having looked at social risks, let's look at digital transformation, which is very much an extension of the social risks that have been transforming themselves. We take here the example of health records, and I personally believe that the digital transformation will completely transform the access to health, to access to medicine and care. The ability to get access to digital information will transform the way we consume health, the way we consume the medicine system. This is true on the life insurance side, and more generally speaking, if you look at the funding that has come to insurtech companies, you should really expect the insurtech to continue to transform our industry, our environment. And this influx of capital to insurtech will transform and will accelerate the digital transformation. Reinsurers are a key party to that, and of course the broader funding and capital availability will increasingly flow to tech companies enabling the insurance industry. Now, if we look at the third factor, the risk coverage, the insurance world, from a life point of view, clearly we are living longer. This longevity increase has been at play for many, many years and will only continue. We live healthier, and we have been able to circumvent the number of key diseases. And this is somehow one of the reasons why COVID has been so disturbing, is that we thought up until now that we would be controlling this kind of situations, this kind of pandemic, and of course we've been proven wrong. So assuming that those key diseases remain under control, they're really giving us some comfort that we'll be able to continue to live longer and in a better health. Now, clearly there is a challenge of funding of this, and how do we fund health? How can government support individuals is going to be a key function, and the support of medical expenses will remain an ever-increasing topic for the broader population. If you look on the P&C side, the universe of risk is as well expanding. Either it is through very traditional way, and of course the One Belt, One Road project is a very telling example that goes way beyond China. It's a pan-continent project, if you wish, that's going to have very physical brick and mortars infrastructure aspects to it, and of course some digital ones. And I think if we look at the digital contribution to insured values, they will only increase. And you can see here on this graph that the components of the Standard & Poor's 500 market value has been shifting very steadily from tangible assets, industrial assets if you wish, manufacturing assets, to intangible ones, intellectual property, technology. And this in terms of insurance will be an absolutely key feature. This is true as well if you look at climate change and energy transition. This will completely redefine a number of industries. The oil and gas industry is, of course, well engaged into this energy transition. Is it doing it fast enough is another question. Power and utilities have been transforming as well. Construction and infrastructures are becoming increasingly connected and environment conscious. I think you can really look every single industrial occupancy you can think of, every single one of them will be impacted by climate change consequences and the need to accelerate that energy transition. Now, if we look at ecosystems, the insurance industry has been very linear, very vertical if you wish, moving from insureds to insurers and to reinsurers in a very vertical way, with lots of intermediation, lots of brokers in the place, and that insurance chain has actually been deeply transformed. Intermediation, especially on the personal lines, is a challenge at heart through technology, but the power of technology is really working on shortening that risk transfer chain and as well consolidating it. Now, what's more interesting is the role that platforms are taking, and the way that a consumer's needs ecosystem is deeply evolving, where there is a centricity of consumer needs that is better understood, and a number of really key innovative players and the big tech companies are really taking this client-centric approach to customer needs. And this is to some extent the failure of the insurance industry, is to have basically been pushing the products, selling the products, much more than being able to transform the consumers as buyers of their products and services. And this is really a trend that will be continuing to move. There is very strong supply forces through automation, through the power of technology, and as well demand that is evolving where customers want a simple journey and a very fast resolution of their needs. And this move from the insurance risk transfer chain to an ecosystem and a platform system has already been at work in Asia and in China in particular in very visible ways recently. And of course, it is coming in other parts of the world and will only become stronger. Now, let's move to the shifting consumer needs. There is clearly a growing realization that health matters and that people want to take a proactive stance to their own health considerations. We see this through the own surveys that Remark, our own company, does, but this is very visible as well when we look at motor and home insurance data. And what we see when we look at surveys across countries, on one hand, consumers are a lot more willing to share their data, and this is again completely new from a generational point of view. The younger generations have far less issues to share their data, especially if they can see a benefit to that. And second, there is another shift in consumer behaviors, and this shift from looking for cheap solutions to better solutions. And the analysis that we show here, provided by Google in many different countries, shows that there is this shift at work towards solutions, towards better value as opposed to cheaper value. And this last analysis, again provided by Google, I find it really fascinating. It shows that insurance is probably one of the most vulnerable industries. Google has run some analysis creating some fake brands and seeing how through promises, through commercial representations, a fake brand could displace a first choice brand. And really this shows a question, is there a value in a brand? Is there a value in institutions? And I think the crisis that we've been going through has really been destabilizing institutions, public institutions, private institutions, and individuals have a tendency to follow far less institutions and prefer the presence, prefer the accessibility of services to the recognition of a brand. The question of the impact of this crisis on the environment, on our society, has really raised new expectations from us as citizens, us as individuals, us as family members, and the aspiration that we expect from work, and the satisfaction we expect from work, from the work environment, the workplace, and the satisfaction we get from going every day to the office and contributing to certain projects. And this is really going to be a fundamental driving force for every single organization, small to large, private to public, is what is the purpose? Why are we working? And why are we contributing to society? And what kind of society we're pushing for? Is this one where we can promote protection and peace of mind? Can we make insurance protection desirable and relevant? This, I think, is a critical matter. How does health and well-being feature in our own requirements? And how do we really promote risk knowledge as a fundamental driver of our decision-making? And all of that, of course, keeping our financial promises to our shareholders, to regulators, and to the society at large, because let's be very honest, we will not be able to sustain businesses without some kind of financial performance. And this is really what we mean by SCORE enabling a better world, is taking this overall view. On this, and as we have just celebrated SCORE's 50th anniversary, I'd like to thank you for your attention. Count on us. We really want to stand by you increasingly and help you making the world a better place. Thank you very much.